Welcome to another episode of Business InspireGY, where we inform and motivate through knowledge. I'm your host, Iva Wharton, and on today's episode, we will be discussing tax compliance for sole trader-operated businesses. With us today is Fabian Klaus, Public Relations Officer of the Guyana Revenue Authority, and he will be dealing with sole traders becoming tax compliant and the importance of paying taxes.
The Guyana Revenue Authority administers the country's tax and trade laws as well as regulations with a mandate of collecting revenue for the state. So our internal revenue, customs, VAT, as well as license revenue departments are all geared towards administering services in keeping with this mandate. I can even go further as to say that the Revenue Authority Act of 1996, which actually paved the way for the formation of the GRA, defines the function of the GRA to assess, charge, levy, and collect all revenues due to the government under such laws as the minister may by order specify. So, saying all of that to say, paying taxes should be seen by you as a social contract with the state so that the revenues that are garnered can be geared towards funding the development needs of the country. Frankly, it's a requirement by law for a portion of your income to be charged, for your customs duties to be paid in order for you to declare items that you import, and for your licensing for your business as well as motor vehicle. So, first of all, you must be paying taxes if you are self-employed and you wish to obtain a shop license. That is, if you operate a shop, a store, a stall, a shed, any yard, or in any town or rural district for the purpose of business. It's a requirement under the Tax Act, Chapter 8001, to have a valid license for that premises. Likewise, anyone who sells alcohol in a shop, a hotel, a restaurant, a members club, you are required under the Intoxicating and Liquor Licensing Act, Chapter 8201, to have a valid license. Now, these licenses are issued by the Guyana Revenue Authority and they are valid for 1 year. If you operate a business or you sell alcohol without a license, it constitutes an offense. At your business, you or your business, as long as your business is operating in Guyana, must make a true and correct declaration of all the income that you earn from all sources for the preceding year. So the income you earn in 2019 should be declared in 2020, etc. Paying the taxes due and payable are also required, and these have to be paid at the prescribed dates. If you fail to comply, it will see certain actions being taken by the Guyana Revenue Authority. If you are self-employed in the professional category, you're required to have a practice certificate, and Section 37 of the Tax Act require that all professionals, as long as you're conducting a trade for a reward in a private capacity, that is, if you're a private doctor, you're a lawyer, an accountant, a tax consultant, you're a dentist, etc., as long as you're in a private capacity, you're required to have a practice certificate from the Guyana Revenue Authority. The practice certificate is valid for 1 year, it attracts a fee, and it must be displayed at your place of practice. Tax compliance is required when you're applying for a practice certificate, and this is very important. And by tax compliant, I mean you must have all your outstanding tax returns submitted and taxes paid. If you fail to do so, it's an offense, and that could see your certificate being denied. If you're a contractor and you are bidding for a government contract, tax compliance is also required. In obtaining that compliance, you have to be up to date with your customs duty payments, tax. If you're an employer, you have PAYE of your employees, you have to pay those. Any VAT and property taxes, those have to be paid as well. If you are selling a property, let's say you have a business and you wish to sell that property, you have to be tax compliant. A tax compliance is required. It's important for you to note that your business must be registered with the GRA for tax purposes. The benefit of sole traders is that they are not required to register for a company TIN. As such, their individual TIN can be used to register the business. So If it's a case you are not in possession of an individual TIN, then you are required to provide a copy of your business registration, a valid form of identification, and the original and copy of your proof of address, and you will be issued with that TIN, which will then be registered to the business. That's if you're a sole trader. Subject to Section 20 of the Income Tax Act, the income tax threshold, that is the amount that determines whether or not you pay taxes, is $65,000 per month or $780,000 per annum. It means that if you earn $65,000 per month or $780,000 per annum, which is the equivalent, then you are not required to pay tax because that is the income tax threshold. It also means that 1/3 of your gross, once it is $65,000 or $780,000, is considered free pay, as in take-home pay. Self-employed persons, you are entitled to claim, in addition to that free pay or threshold, overheads. Anything that is incurred on your business, you can claim. So you can claim any interest on monies owed in relation to your business, any rent paid by any tenant of land or building, any cost incurred for example, if you replace any plant or machinery which was used or employed in your business, wear and tear allowance on tools of trade, for example, your buildings, if you have a motor vehicle, if you have plant and machinery, office equipment, there's a percentage of those that you can claim, and it's usually between 10 and 20%. Also, rates and taxes on immovable property, those are also deductions that you can claim. All in accordance with the Income Tax in Aid of Industry Act, that is Chapter 8201. So, how much tax do you pay? Well, Section 36 and 36A of the Income Tax Act states that the chargeable portion of your income, which is the amount that remains after you would have claimed all your deductions, is taxed at 28%. Once that amount, that chargeable amount, is $1,560,000 or less. If it's over $1,560,000, then the tax rate is 40%. As a self-employed person, you pay taxes in advance quarters, and those quarters are April 1, July 1, October 1, and December 31. It's important to note that the advance year is actually the current year. So in those advance quarters, you calculate the amount of taxes you have to pay for the year, you divide it by 4, and you pay in that advance quarters those dates that I mentioned before. And the following year, in our case 2021, you submit a tax return to determine if the taxes have balanced, if you have a refund, or if you have any taxes owed to the GRA as a result of those advance taxes paid. You are required also by law, in accordance with Section 60 of the Income Tax Act, to submit to the Guyana Revenue Authority and the Commissioner General a true and correct declaration of all the income earned from all sources in the year preceding the year of assessment. So the year 2020 is considered the year of income. The year of assessment would be 2021. So in 2020, you are submitting a return, that is if you have a business, for the income earned in 2019. As a self-employed person, you are mandated to register for VAT if it is your business sales have reached or exceeded $15 million at the end of the year or during the course of the year, and this is in accordance with Regulation 3 of the VAT Act, which is mandatory. You are required to submit a VAT return for each tax period with the Commissioner General within 15 working days after the end of that period. And this is whether or not tax was paid in respect of that period. So the VAT that you collect in November should be paid over 15 working days in the month of December, and this is all in accordance with the VAT Act. The Act also provides for electronic submission of your tax returns or declarations. You can submit those via e-services, and these are all on the GRA's website. So instead of coming into the GRA to submit your returns, you can make those submissions online with the touch of a button. You should also, as a VAT registrant, become aware of zero-rated and exempt items. Zero-rated and exempt for the consumer, it's the same. You pay no VAT, but for the business, the implications are different. Zero is a percentage of VAT, so it means that you can claim on all your zero-rated items, but if the items are exempt, then you can't claim on your expenses before you pay over the balance of tax to the GRA. Also pay attention to ensuring that you don't miss any deadlines for payment, because there are penalties and interests for late submission, whether it be VAT or income tax. Now, there's some simple tax advice that can help you if you have a simple business, if you're a sole trader. It's always encouraged that you total your records in a periodic manner, that is daily, weekly, monthly. And this will help you to easily find your yearly income and expenditure statements. You should also collect income tax returns from the tax department and attach it to the income and expenditure statements that you prepare. Submit your returns to the department on or before the prescribed dates of submission, and it's usually April 30 of every year. All the forms are available on the GRA's website, gra.gov.gy, and these forms are in the fillable PDF, and they can be filled out with accuracy. The forms also calculate your taxes for you once all of the required information is inputted correctly. Also, another bit of advice: during your first year of operation, find out all about your quarterly advance taxes, which I mentioned before. And this is with a view of making prompt payments. And if necessary, when they become due, the GRA has a tax advisory services department that you can contact for assistance, 227-6060, extension 1201 to 1204. Purchase all the necessary license and practice certificates, which of course you will display at your business premises or have on your person while you're doing business. Once you earn income, you should seek advice from the GRA about your obligations. You must also seek advice from a certified tax consultant who is recognized by the Guyana Revenue Authority. This is also important. Keep records of all your business transactions. That is, records in a book, all your costs, expenses, all the expenses that you incur to do business, and in a separate book, all the sales, the income you get from your products or your goods or services. Also important, keep your bills, keep your receipts of everything that you purchase to support your records. And these should be kept for a period of 8 years. And lastly, an income earner is subject to scrutiny from the GRA, even if you are above pension age and you are already retired, or even if you get income from your own business. So these are the simple advice that you should take for your business so that you're in compliance with the country's tax laws and regulations.
If you may have joined us late, you can review this program on our Facebook page or YouTube channel, and we encourage you to take the opportunity to become tax compliant.